UWI economist Dr. Valmiki Arjun has noted that the recent increase in the net asset value, NAV, of Trinidad and Tobago's Heritage and Stabilization Fund, HSF, comes at an interesting time, both economically and politically. His comments came on September 6th, a day after Finance Minister Coleman Bird announced that the HSF's NAV had reached $6 billion. On September 5th, Imbert shared on X, formerly Twitter, that the value of the HSF in June 2022 was $4.7 billion. This lower value was attributed to instability in the international financial system at that time. Imbert stated that due to prudent management, the NAV of the HSF increased to $6 billion, reflecting a rise of $1.3 billion over 2 years. Arjun responded to this news in a statement, saying, "This is indeed positive news, consistent with global equity market fundamentals." He recalled that the last time the HSF's NAV was above this figure was in December 2019, just before the COVID-19 pandemic began. The pandemic's impact on market fundamentals and subsequent withdrawals from the HSF for budgetary support caused the fund's NAV to decline. In 2022, Arjun explained, inflation driven by the pandemic prompted major central banks worldwide to raise interest rates, which caused bond prices to drop. This situation also led to market panic and uncertainty in equity markets, resulting in lower stock prices. He noted that from December 2021 to October 2022, the S&P 500 index fell by approximately 23%. These factors, along with over $1.8 billion in withdrawals during the pandemic, caused the HSF balance to decline to $4.77 billion by June 2022, representing a 27% decrease from December 2019 to September 2022. Arjun highlighted a significant recovery in the capital markets, especially in the stock markets, during the second half of 2023 when the U.S. Federal Reserve, Fed, paused its rate hikes. This pause helped stabilize borrowing costs for businesses and consumers, boosting spending, investment activities, and corporate profitability. This caused a bullish outlook for investors and increased equity purchases, which pushed prices upward, Arjun said. The Fed's signal to lower rates by September further enhanced positive investor sentiment, reduced uncertainty, and increased equity prices, benefiting the HSF's NAV. Arjun noted that from December 2022 to March 2024, the equity and fixed income portfolio values of the HSF increased by 40% and 14%, respectively. He added that when the Fed decides to lower interest rates, this will drive up bond prices and increase the value of the fixed income portfolio of the HSF, a decision he anticipates will come soon. However, Arjun also predicted some volatility in capital markets due to events such as the U.S. presidential election in November and other geopolitical developments. From a political standpoint, he noted that the increase in the HSF's NAV coincides with a new fiscal year falling within an election period. The next general election in Trinidad and Tobago is constitutionally due by August of next year, with a 3-month window after that to call the election. Arjun suggested that the government might aim to avoid undermining further economic activity and could look to increase expenditure, particularly in areas like capital expenditure and social programs. This raises the possibility of the government tapping into the HSF for budgetary spending, especially if petroleum revenues fall at least 10% below the budgeted revenue. Under the HSF Act, 60% of the excess tax revenue from oil and gas, the difference between actual and budget estimates, must be transferred into the HSF annually. The oil and gas prices used for the budget estimate must consider recent price history and projected prices obtained from defined international sources. Arjun pointed out that energy production has been declining, with natural gas and crude oil output falling by 32% and 9%, respectively, over the last 5 years. Arjun warned that if the upcoming budget is based on overestimated oil and natural gas prices, there is a possibility that actual petroleum revenues could fall below the budgeted figures. This scenario could trigger a withdrawal from the HSF if actual petroleum revenues are lower than budgeted revenues by at least 10%.